All right, thank you, everyone. I'd like to call the meeting of the Senate Finance Committee to order on March 8th. Would the clerk please call the roll?
Senator Acosta.
Present.
Senator Cano is present. Senator DePalma.
Here.
Senator Felag.
Present.
Senator Murray.
Present.
Senator Paolino.
Here.
Chairman Pearson.
Here.
Senator Seveny.
Here.
Senator Sosnowski.
Here.
9 members present. There is a quorum.
Thank you, Mr. Clerk, and thank you, everyone, for joining us today. We're going to move the order of the agenda around just a little bit to accommodate a few members who are joining us. Senator Raptakis has only one bill on the agenda today, and so it seems only fair to start with his bill. Senate Bill 372 by Senator Raptakis, an act relating to taxation, business corporation tax and franchise tax. Senator Raptakis, would you care to introduce your legislation?
Sure. Mr. Chairman, I don't have a camera, but can you hear me?
We can.
Great. What Senate Bill 372, it's a bill that we introduced in the past, is to allow the minimum corporate tax that is paid by all businesses to at least be refunded in some sort of fashion. And the reason for the bill, for example, if you have a small business that has to pay the minimum tax of $400, at the end of the year, if your business had a loss of $400, the state still keeps that $400. So what we're saying is reimburse the $400 back. If you had a loss of $1,200, you would only get the minimum reimbursed. So that same small business, if it had a profit of $200, then it would pay the state $400 minus $200 and end up being reimbursed $200. If it owes the state $1,000, then I believe that tax should be deducted from the minimum that was paid. The only flaw on the bill, Mr. Chairman, I apologize to the committee that when it was written, it should have applied to all corporations. I know you received a letter from the Division of Taxation, so that bill should not have been limited to just a corporation. It should have been applied to an S corp or to an LLC. And the other portion was I was trying to limit it to a threshold of no more than $5,000 because a company like CVS, Stop and Shop, I don't think they're worried about the $400. But when you have a small local business, and this is a bill targeted to small business, the state keeps that $400 regardless. It's mandated. I know it's a minimum corporate tax. We did reduce it from $500 to $400, which to me $100 really is not going to make a difference. But if you're a small business and you're struggling, when you pay that minimum corporate tax, and if you don't owe the state any money at the end of the year, why should the state keep that $400? And that's basically the bill itself. And thank you, Mr. Chairman.
Thank you, Senator Raptakis. Are there any questions or comments from members of the committee? Okay. Hearing none, Senator, I know that you mentioned there may be some work to do on this, and I will just say for all the bills we're hearing today, we only have a fiscal note on Senate Bill 95. The rest are pending. As I think the members are aware, the Budget Office is currently preparing the new governor's budget submission, and so we likely will probably get them after that, given where they're at. So with that, Senator, any other questions or comments for Senator Raptakis, or are we good?
Motion to hold.
Senator Raptakis?
Oh, Mr. Chairman, I'm going to work with the Division of Taxation just to get those flaws out. They had a letter. They weren't taking a position on the bill. So I'm going to contact I guess it's Ms. Savage, the tax administrator, to work out the language that was missing on the bill and then move forward and get another opinion from them. And thank you very much.
Thank you, Senator. Senator Felag.
Motion to hold, please.
Senator Felag moves to hold, second by Senator DePalma. And would the clerk please call the roll?
Senator Acosta. I think is he off the?
I say yes.
Senator Cano.
Yes.
Senator DePalma.
Yes.
Senator Felag,
Yes.
Senator Murray,
Yes.
Senator Paolino,
Yes.
Chairman Pearson,
Yes.
Senator Seveny. Senator Seveny, yes. Senator Sosnowski.
Yes.
9 in favor, 0 opposed.
Thank you, Mr. Clerk, and thank you, Senator Raptakis. We will hold that bill and continue working with you on it. Okay, next bill we'll take, it looks like Senator Calkin is with us this evening. Senate Bill number 97 by Senator Calkin, an act relating to taxation, establishes a surtax on the business corporation tax for publicly traded corporations, subject to SEC disclosure and reporting requirements. Senator Calkin, would you care to introduce your legislation?
Thank you, Mr. Chair and members of the committee. This bill would establish a surtax on the business corporation tax for publicly traded corporations, subject to the SEC disclosure and reporting requirements if a corporation's ratio of compensation for its CEO to median worker is equal to or greater than 100 to 1. This is the third year I've introduced this bill to tackle income inequality. Extreme gaps in workers to CEO pay can undermine worker morale, which can reduce productivity and increase employee turnover, especially when workers contribute so much to the success of the company. According to the AFL-CIO, the average S&P 500 company CEO to worker pay ratio was 264 to 1. NRI, these companies include CVS Health Corp, which has a 790 to 1 ratio. Hasbro has a 237 to 1 ratio. Textron has 191 to 1. Citizens Financial Group has 149 to 1, and United Natural Foods has 140 to 1. So these are the 5 companies that would be affected. According to a Go Local article, CVS Health CEO was the 29th highest paid CEO in the country, and Hasbro's was the 38th highest paid. Just for some history, back in 2017, in April, our very own treasurer, Seth Magaziner, signed on to a letter with other treasurers and state officials in support of tracking CEO pay ratios in order to combat income inequality. The letter reads in part, quote, as government officials responsible for our respective state pensions and investment funds, it is our responsibility to protect the retirement security of tens of millions of teachers, law enforcement officers, firefighters, and other public employees and their families. We want companies in our portfolios to be successful, and research indicates that extreme gaps between CEO and worker pay can reduce financial performance by undermining employee morale, which in turn reduces productivity, end quote. The Institute for Policy Studies states that, quote, the top 1% of America's income earners have more than doubled their share of the nation's income since the middle of the 20th century. Beyond the direct impacts on economic inequality, runaway CEO pay poses other dangers to our society and democracy. It drove the reckless bonus culture that was a major factor in the 2008 financial crisis, and it encourages a short-term mentality among business leaders that encourages other reckless behaviors that may pad executive paychecks in the short term, but cause long-term damage to the company and the country, such as slashing jobs, cutting research and development, and cooking the books, end quote. So you may hear some objections to this about how it might make companies leave the state, but the CEO pay surtax will amount to just a fraction of a percent of a corporation's taxes. And you might also hear that this may incentivize companies to outsource lowest paid workers so they can narrow their internal pay gaps without having to reduce the CEO pay. But outsourcing is already quite widespread, and it's hard to imagine that many firms are going to be able to shed enough employees of their lowest level workers in a cost-effective way to make the strategy work. And also, this would be very difficult in the retail space. So thank you for hearing this bill today, and I hope you will support it. Thank you very much.
Thank you so much, Senator Calkin. Are there any questions or comments from the committee for Senator Calkin? Senator Acosta.
Thank you, Mr. Chairman. And Senator Calkin, I asked this in the form of a suggestion, but also in the form of a question. Without being too condescending, either to my colleagues or to folks watching us at home, can you explain to us the significance of pegging the ratio to the median and not the mean, and what that means for the distribution of wages within the organizations that we're looking at? And the suggestion part of this is, can we make sure to add the definition of pay ratio to include median? Because right now median comes up in the legislative findings and it comes up at the end in the explanation of the bill, but it's not in the meat of the bill. So in the part where you talk about the ratios and where the fees are, it's not included that it's pegged to the median.
Sure. I think just from what I've seen in the past, and it's been a while since I've looked at that particular factor, so I can get you some more information. But the median pay definitely seemed to be the fairest way to be able to calculate it, given the sometimes the variety of different jobs a corporation might have and so forth. But yeah, I'm definitely open to suggestions on making this a stronger bill, so would be happy to talk to you some more about it.
Thank you, Thank you, Senators. Are there any other questions or comments from members of the committee? Okay. Hearing none, we do have testimony this evening. The first witness testified this evening on the legislation is Andrew Poyant, representing himself in support of the legislation. Andrew, welcome to Senate Finance.
Thank you. Are you all set for me to start?
Please proceed.
Okay. Hi, my name is Andrew Poyant. I'm a resident of Providence. I am calling to support Bill 0097. And I think that, I support raising the minimum wage, but I think if we're ever going to get it to a point that everyone is making enough to live, we also have to go after those that are making an obscene amount of money. And this bill is a start in the right direction in order to do that. With there's corporations that are paying CEOs thousands of times more than what the average worker is, and it would level the playing field and help out our small local businesses as well as all the workers that aren't making as much as they should be because it's going to CEO pay. That's it, and I hope that you guys support it and put it to a vote for the full Senate. Thank you.
Thank you so much, Andrew. Are there any questions or comments from members of the committee for Andrew? Hearing none, thank you, Andrew, for your testimony this evening.
Thank you.
Next to testify this evening is going to be Randall Rose, speaking in support of the legislation. Randall, welcome to Senate Finance.
Thank you, Mr. Chair and members of the committee. I am in support of Senator Calkin's bill, Senate 97, and it's an important bill which will help the economy by encouraging companies to pay their workers a little more. It imposes a slight tax on large corporations that pay their CEO more than 100 times as much as their average employee. And one thing I want to emphasize is that this does not apply to most companies. The bill only applies to corporations that are required to file pay ratio information with the SEC. So it doesn't apply to any company that's not listed on the stock exchange, and even for companies that are listed on the stock exchange, it only applies to listed companies that have at least $75 million float of stock available for public trading, and also at least $50 million in annual revenues. So this is only going to apply to the largest corporations, and among the largest corporations, only the ones that pay their CEOs huge amount of money. But it is a good bill because it encourages those large corporations, most of which are located out of state, to pay their Rhode Island employees more instead of wasting a lot of money on CEO compensation. So for that reason, I support the bill.
Thank you so much, Randall. Are there any questions or comments from members of the committee? Hearing none. Randall, thank you so much for your testimony this evening. Next to testify is Gregory Wamolski, in support of the legislation and representing Unitarian Universalist. Gregory, welcome to Senate Finance.
Hello. Thank you so much for having me. I really want to express my gratitude to Chair Senator Pearson, First Vice Chair DePalma, Second Vice Chair Senator Fellag Jr., and of course, all of the wonderful, honorable members of this committee who are serving everyone in their districts, but also everyone in the state. I also just want to point out that, you all are in charge of the purse strings in the Senate and deciding what is going to be the agenda going forward for this in our very important first session here in 2021. This is the year. Also, I appreciate I'm not the only person coming out here to speak. I think that all voices definitely have a room in such a wonderful opportunity for civic engagement and to keep the lifeblood of democracy strong. We're here tonight. I'm speaking to you in support of Senate Bill 097. This is a great start. You all can look in Forbes. You all can look in, any news magazine you want, and you can see inequality raging throughout our country like wildfires in California during the summer. It's ravaging all kinds of communities. This is a chance to start to address that. Now, you know as well as I do that justice compels us to be fair. And, we have a lot of holidays on the calendar here in Rhode Island that come from the Abrahamic traditions. Any person who looks into their heart and consults with the teachings of those wonderful traditions is going to see real clearly what's right and what's wrong when it comes to compensation, when it comes to what we demand of our labor force and what we entitle our professional CEO class. Now, the closer that we can get to equal, that would be great. I know a lot of my friends, a lot of people in my neighborhood would love a one-to-one bill, a bill that makes sure that even the lowest paid isn't paid any less than the CEO. And I think one day in this country we're going to get there. We're all going to appreciate that we are just the same person and everyone is valuable. When we work together, we grow this country. But for right now, this is 100-to-1. That's pretty luxurious. That's pretty amazing. And what I'd say is if anybody can't make it to their yacht or to Mars on 100-to-1, they need to start paying the lowest paid more and stop figuring out how they can pay themselves in an unequal fashion. Now, this makes sense to me. Again, I'm here as a Unitarian Universalist tonight. I sit in a lot of groups, and as a person of faith in a religion that looks towards my heart to understand what I should do, I'm asking you to be compelled in the same direction. Vote in support of this. Recommend it up. Get it on the floor. Let's pass this. This is the year. A lot of people will stand up straight. A lot of people will understand what Finance Committee is about this year. And I know that all of you are looking to make a legacy for the rest of the country, for the rest of many generations to come. Thank you once again for having us all in here tonight. I have more than enough time for questions if there are any.
Thank you so much, Gregory. Are there any questions or comments from members of the committee? Hearing none. Gregory, thank you so much for your testimony this evening.
Word.
That concludes our testimony this evening on Senate Bill number 97. Senator DePalma.
Motion to hold, too.
Senator DePalma makes a motion to hold, seconded by Senator Seveny. Would the clerk please call the roll?
Senator Acosta.
Yes.
Senator Cano.
Yes.
Senator DePalma,
Yes.
Senator Felag, Senator Felag, Senator Murray,
Yes.
Senator Paolino,
Yes.
Chairman Pearson,
Yes.
Senator Seveny, Senator Seveny, yes. Senator Sosnowski,
Yes.
8 in favor, 0 opposed.
Senator De La Cruz, do you wish to vote on this legislation?
I logged in to testify on my bill.
All right, just wanted to make sure.
Thank you.
Clerk, what's the result of that vote?
8 in favor, 0
8
opposed.
in favor, 0 opposed. Thank you, Mr. Clerk. We will hold that legislation. Senator Calkin, thank you for joining us this evening.
Thank you very much for hearing the bill. Appreciate your time.
Thank you. Next on our agenda this evening, Senator De La Cruz, we will head to your bill next, Senate Bill number 95, an act relating to public finance state budget. Senator De La Cruz.
Thank you, Chairman. The law already requires heads of executive branch departments to estimate expenditures and requests for appropriations for the next fiscal year. This bill would require that the governor submit a zero-based budget to the General Assembly that would be phased in over a 5-year period. For those who haven't heard of the concept, zero-based budget requests are requested for appropriations based upon a justification of a department for a zero base, as if the budget for the department was being initiated for the first time. What this bill does is require that we change the way budgeting is done, but we propose this in baby steps. July 1st, 2022, the estimates for expenditures and requests for appropriations be based upon a justification by each department head that of that budget from a zero base. This request shall be accompanied by a statement giving facts and explanations as for all of the expenditures. July 1st, 2023, zero-based budgets shall be submitted by 20% of the state departments, those that had the lowest budget request for fiscal year beginning July 1st, 2022, and shall proceed each year in a similar manner. Senate and House committees will then be able to review each department's budget through the appropriate committee and report findings and make recommendations as to the needs of each department. It's the way a lot of people budget, so it's also very effective. There is no time like the present, I think, to change the way that we do the budget in Rhode Island. It appears that we will, there'll be a new bill slated to pass in the U.S. House and in the Senate that looks like there'll be, the money that will be coming in will wipe out our fiscal year 2022 budget deficit, which is estimated to be around $329 million as last estimate. So if that's the case, we have a clean slate, and while there may be a structural deficit, this bill can fix that by requiring a lot more transparency than we have now. Thank you.
Thank you, Senator De La Cruz. Are there any questions or comments from members of the committee?
Thank you.
Hearing none. And we also do not have, I believe, any witnesses signed up to testify on this legislation this evening.
Motion to hold, Mr. Chairman.
Senator Felag makes a motion to hold.
Second.
Second by Senator Cano. Would the clerk please call the roll?
Senator Acosta,
Yes.
Senator Cano,
Yes.
Senator DePalma,
Yes.
Senator Felag,
Yes.
Senator Murray,
Yes.
Senator Paolino,
Yes.
Chairman Pearson,
Yes.
Senator Seveny, Senator Seveny, yes. Senator Sosnowski,
Yes.
9 in favor, 0 opposed. Thank you, Mr. Clerk. We will hold that legislation in committee. Next on our agenda this evening, Senator Palma, would you like to care to do your legislation at this point? Senate Bill 41?
Yes, Mr. Chairman, thank you very much.
Members of the committee, this is not the first time we've heard or passed this bill. It's not the second time we've heard or passed it. It's not the third we've heard or passed it, maybe the fourth or the fifth. I lose track of counting, but hopefully this will be the year we hear it, which we are doing today, and pass it. We in the Senate have done it. It has not been passed out of the House. And what the bill seeks to do is, folks are familiar with and maybe some of the new folks may not be, we have what's called in November and in May, both a revenue and caseload estimating conference. This one here focuses just on the caseload estimating conference. The reason this is important, the conference that happens in November is the one that informs the governor in the budget that the governor puts forward for the next fiscal year, even for this year, for that matter. What does that mean? For things that are Medicaid driven, with regards to the Medicaid costs, the entitlement programs, the governor must. There's some nuances to if there's some things that are may come about subsequent to November estimating conference, so when the budget will typically come out the third week of January. This year it will be this Thursday. The governor must account for what the caseload estimating conference conferees agreed to. In fact, our fiscal advisor, fiscal advisor Steve Whitney, is a member of that group. Sharon Reynolds Furling, the House fiscal advisor, member of that group, and typically the budget officer is the third member of that group. So when that group convenes and hears testimony from various agencies as it relates to Medicaid. Medicaid is our largest single source of expense in the state, largest single source of expense both from a general revenues perspective and a federal government perspective. The only rivaled by education, which it should be, and they're beginning to be neck and neck from the perspective of general revenues. All Medicaid programs are not included in the caseload estimating conference. We know about some of the challenges we've seen with the Department of Human Services as it relates to some of the programs there. A good number of the programs within the EOHHS Secretariat or the HHS Secretariat, Department of Human Services, etc. Long-term care is a part of that. The Department of Children, Youth, and Families uses Medicaid, is not a part of that. One that we're all familiar with, and she's gone now, Eleanor Slater Hospital. We're all familiar with the challenges being faced at Eleanor Slater Hospital. Was Medicaid. Let's put that aside for a second. One of the other areas that's been out there in the forefront in the press, written, televised, online, has to do with the developmental disability community. One that many of us are familiar with and have a focus on and have constituents who use those services. We have over 4,200 individuals in the state of Rhode Island who receive services from the developmental disability providers out there in the state. Some do it on their own, some are self-directed, but there are over 4,000 individuals who receive some type of services from the state. So I'm not going to, I would have put up 3 tables for you and said, this is how it's done. And each of you could have done that in the afternoon in 1 hour. It took me 4 hours. Why? Because I wanted to color code some of the columns. But we have, and we know, based on the setting of an individual, whether they live at home, congregate care, and there's 2 other settings, based on the level of supports that they receive via the support intensity scale A, via tier A through tier E. So think about a matrix. We all remember back in school, a matrix, a table that's 4 by 5. We have a dollar amount in there for that individual. We know how many individuals are in each category because everybody has an assessment and they're reassessed every 3 to 5 years. I forgot the exact number. It really doesn't change from one time to the next. And if it does, somebody typically will move to a higher category of need than a lesser category of need. Well, when I talk about doing a matrix multiplication, you take the first table, multiply it by the second table, and out pops a composite table that has all the numbers in there that when you add that up, begins to provide for you the significant cost basis for what the DD budget needs to be. Is that where it ends? No. Why do I know? Because I've done it. There is also additional allocations that are provided. They call it the L9, driven by S109. How do we know those numbers? And how do we know the other numbers? There are numbers that are produced by the DD division every month. It's called Article 28, and it goes back well over a decade. I have a decade of those reports. And in fact, I always know on the 15th of the month, and that's in Rhode Island general law, I'm going to get another report. And every single month I look at certain numbers, and the numbers do not change from one month to the next based on the category of folks, etc. But the L9 stuff is in there as well. We also have, that's another plus sign to the equation. We also have some individuals who are out of state. And they've been out of state for various and sundry times. And if we go back over a period of time of 5 or 10 years, we know what that average number is as well. So in the matter of, I know I've taken more of my time than I should have, in the matter of about 6 or 7 minutes here, I just described what the caseload estimating conference would need to be for the developmental disability community. Add to that a consent decree that we, the state, are under because of violating the rights of the American with Disabilities Act, the rights of those individuals, and the Olmstead decision of people being in the right setting at the right time, at the right place for the right reason. And yet, for 5 years, we still have not included them in the caseload estimating conference. One question we should all ask ourselves from a finance committee perspective, and I'm not going to answer it, I know the answer. If that's not used nor done to create the DD budget annually, then what is? So somebody said, well, they should just use that. They should, and they will. But providing something as part of the caseload estimating conference ensures it gets done because it puts it in law, it puts it forward, or it's in law, puts it forward. There'll be some detractors that will say, well, what about that? They might even want to say that DD services are not an entitlement program. I would beg to disagree. We have a consent decree we signed. Year 7 will begin on April 9th, I believe. We should have been through this already. It's a 10-year consent decree. It can go more years. It shouldn't, and hopefully it doesn't. So with that, that's the rationale for it. For the other categories, it's as similar. It may not be as proscribed or prescribed as I articulated with regards to the DD side of the world, but it can be. And if anybody wants to see the tables, I can send those to you. We can spend as much time as you'd like, and you'd say, hope you'd say, wow, there it is. So, Mr. Chairman, I'll turn it back to you and answer any questions anybody might have.
Thank you so much, Senator Palma.
By the way, there is, if I may, Mr. Chairman, I'm sorry to interrupt. Some might say there's a cost to do this. I would disagree, and I'd offer my services to do it. Thank you.
Thank you, Senator Palma, and I know that you have worked tirelessly on this issue, especially DCYF and the DD community. I think all of us agree that ensuring we have adequate and proper budgets for these departments are of key importance as we consider the budget each year. I would like to note that we also do have testimony from Rhode Island Kids Count in support of Senate Bill 41, especially with emphasis on the DCYF caseloads. Are there any questions or comments from members of the committee?
Yeah, I have a question.
Senator Feeling.
Senator Palmer, I think this would greatly assist in streamlining the process, right? So that we get the estimate pretty well on target rather than trying to estimate those other aspects, correct?
Senator, you're right on. In fact, when I calculated the number, and I said, then I asked the fiscal office, I went back to our books that are online. It's great to have all this information online. My calculation came up to like $310 million or thereabouts. What did BD have for budget last year? $305 million. So it shows a pretty good basis for what's there. And since you brought it up, Senator Feeling, a few years ago, it was unconscionable. Governor Raimondo in the budget chose to cut $18 million out of the DD budget. $18 million. Back then it was about a 52-84% between the state, the state about 48, federal government from an FMAP perspective about 52. Obviously, it's much higher now with the enhanced FMAP because of the pandemic. That was $9 million of general revenue. And what do we need to do as a General Assembly? And we did. We put it back in. So you could, Senator Felag knows she could not have done that had that been the case.
Right. I mean, obviously, there was all these program reduction that were implemented within that particular budget that really didn't make any sense. And we knew it was going to come to fruition. And so we had to try to put the money back in, which was, inaccuracy in terms of what the actual budget requirement was.
Thanks for bringing that up.
Thank you, Senator Felag and Senator Palma. Are there any other questions or comments from members of the committee? Hearing none, Senator Palma.
Motion to hold.
Senator Palma makes a motion to hold, second by Senator Felag. Will the clerk please call the roll?
Senator Acosta.
Yes.
Senator Cano.
Yes.
Senator De Palma.
Yes.
Senator Felag.
Yes.
Senator Murray. Senator Murray, yes. Senator Paolino.
Yes.
Chairman Pearson.
Yes.
Senator Seveny.
Yes.
Senator Sosnowski.
Yes.
9 in favor, 0 opposed.
Thank you, Mr. Clerk. We will hold that legislation. Next on our agenda, our agenda now begins Senator Bell Day here in the Senate Finance Committee. Senator Bell, welcome to Senate Finance. First of your legislation on the agenda this evening is Senate Bill number 46, an act relating to taxation, creates an agreement to limit corporate incentives. Senator Bell.
Thank you so much, Chairman Pearson. What this legislation does is this is an interstate compact, and it creates an agreement between multiple states that have passed this legislation, and only the states that will have passed this legislation, that these states will not use basically financial incentives to steal jobs from the other state. So one of the problems we often have with the practice of basically paying companies in order to move to another state is that it creates a race to the bottom. And in the end, the state winds up, all across the country, states wind up poor, and we wind up spending a lot of money subsidizing wealthy corporations who don't deserve public subsidies. And many people who support doing these subsidies here in Rhode Island acknowledge that it's not an ideal program, and ultimately it would be better if we found a way to get away from this race to the bottom. So there's been a long-standing problem between the governors of Kansas and Missouri, and they have constantly been using incentives to get companies to relocate from one side of the river in Kansas City to the other side of the river. And after years of this problem, there was a bipartisan agreement between the Democratic governor of Kansas and the Republican governor of Missouri to eliminate the use of corporate welfare to steal companies from one side of the river in Kansas City to the other. It was just limited to Kansas City. The idea is to take this proven concept and expand it to the national level. And legislation is being introduced across the country in multiple state houses. And the idea is that ultimately, if we did this, we could phase out this problematic race to the bottom without suffering any short-term effects ourselves. So I would like to recommend, request that this bill be held. There are some technical issues around some language introduced by Leg Counsel I didn't ask for that I would like to get fixed before we move forwards with this legislation. So if possible, I would like to recommend that it be held.
Thank you, Senator Bell. Are there any questions or comments from members of the committee for Senator Bell?
Motion to hold.
Senator Palma makes a motion to hold. Oh, I apologize. We actually do have witnesses on this legislation. We do have Randall Rose in support of the legislation.
I'll withdraw the motion.
Thank you, Senator Palma. Randall, welcome to Senate Finance.
Thank you, Mr. Chair, members of the committee. I am in favor of this bill, Senate Bill 46, and it's a good way to save money on those corporate incentives that are not actually helping the state. We do have a lot of tax incentives that are given out to companies that move just like other states do. Unfortunately, when all the states are trying to play this game of giving tax incentives to companies to move from one state to another, it doesn't bring any net benefit. It ends up just being a transfer from ordinary tax-paying Rhode Islanders to companies that owe no loyalty to the state, and it's not a good system for us to be in. So what this bill does, it actually makes an agreement with other states to refrain from poaching other states' companies. So if Rhode Island and New Jersey both sign this agreement, this interstate compact, all the bill does is it means that New Jersey is not going to give specific companies tax breaks to move from Rhode Island to New Jersey, and in return, Rhode Island won't give those tax breaks to specific companies to move from New Jersey to Rhode Island. It doesn't have any effect on what happens with companies that are moving from a state that has not signed the agreement. It's only a mutual non-aggression pact with states that are willing to sign the agreement so that they don't try to poach Rhode Island companies and we don't try to poach their companies. And this bill doesn't apply to most kinds of corporate tax incentives. It only applies to tax incentives that are written for specific companies to move from one state to another. So it's not going to affect the vast majority of things that we do to attract companies. Its effect is going to be very, very limited. But it is a popular measure. There's support for it from across the political spectrum because we have gone too far in corporate welfare incentives that don't actually help Rhode Islanders. And this bill only deals with some of the most egregious corporate incentives and reduces them in a way that we get a benefit in return when we reduce these corporate incentives for companies moving from New Jersey to Rhode Island. We're doing it only in return for New Jersey agreeing not to poach Rhode Island companies. So it's a well-designed bill, and although it leaves the door open for future measures, and there are some suggestions in the bill that this mutual non-aggression pact with other states could be extended perhaps in the future to other kinds of tax incentives, none of that's binding. The only binding part of the bill is just saying that if New Jersey doesn't provide tax incentives to named companies in Rhode Island to move to New Jersey, we won't do the same in return. So the binding part of the bill is very limited and very non-disruptive, and at the same time, it does show that legislators in Rhode Island are aware of the issue and are willing to do something to reduce unnecessary spending on this. So for those reasons, I support the bill. Thank you.
Thank you so much, Randall. Are there any questions or comments from members of the committee for Randall? Okay. Hearing none, thank you, Randall, for your testimony this evening. Senator Bell, I just have one question on this legislation. Do you have any opinion as to whether it would need to be ratified or approved by Congress under Article 1, Section 10?
So that is a good question. My understanding is that, I'll be honest, I think that current court precedent would suggest that it does not have to be. However, I think that technically, if I were a constitutional lawyer, do I necessarily agree with that original interpretation? I'm not so sure. But that is, I think, standing precedent that it would not have to be applied. And there's plenty of standing precedent that those constitutional protections have been substantially limited. And many interstate compacts have withstood constitutional scrutiny. So I think it might not stand the most robust originalist analysis, but I do believe that it would stand and analysis under standing precedent.
All right. Thank you, Senator. Are there any other questions or comments from members of the committee? Senator DePalma?
Motion to hold?
Senator DePalma makes a motion to hold. Second by Senator Seveny and Senator Sosnowski. Will the clerk please call the roll?
Senator Acosta.
Yes.
Senator Cano.
Yes.
Senator DePalma. Senator DePalma, yes. Senator Felag.
Yes.
Senator Murray.
Yes.
Senator Paolino.
Yes.
Chairman Pearson. Senator Seveny. Senator Seveny, yes. Senator Sosnowski.
Yes.
9 in favor, 0 opposed.
Jamie, sorry about that. I said yes, I was on mute though. Chairman, we can't hear you.
Sorry about that. Thank you, Senator.
Good practice.
Next on our legislation is Senate Resolution 161 by Senator Bell, a joint resolution to authorize and approve a referendum to be submitted to the qualified electors of the state of Rhode Island at the next general election for blanket authority for the general treasurer to refinance bonds. Senator Bell.
Thank you so much, Mr. Chairman. So this legislation I'm mostly introducing to suggest an idea as a pay-for to address difficult budget situations. So the idea comes from Governor Raimondo's original budget in 2015, where one of the ways in which he was able to address a budget hole and then provide additional funding for an expansion of the Economic Development Corporation, now renamed the Commerce Corporation, and their incentive programs, was to refinance Rhode Island's general obligation bond debt. And by refinancing the debt, what they actually did was they extended the terms of the bonds, but took advantage of very low interest rates available at the time. And so we're able to deliver a substantial savings in the present budget because of pushing out the amortization schedule and pushing out the schedule of when the larger bond payments take place. But we're also able to achieve substantial net present value savings, delivering a long-term return to the taxpayer. I think it was a really good idea that has substantially improved our capital budget position and leveraged our ability to make crucial investments at a time when investments were necessary to stimulate the economy. We're currently in another similar situation where we have a need for investments, although our budget picture right now with the Biden administration's new stimulus, which is likely to pass, will soon be pushed into surplus. But we have a huge need for additional investments to stimulate our economy and create robust growth to address all the very real suffering that's out there in our state economy. So the idea here would be to extend that beyond just general obligation bonds. Rhode Island has quite a lot of debt that does not meet the official general obligation of the voters, often issued through various quasi-public agencies. And the idea would be to allow the general treasurer to leverage the lower interest rate available on general obligation bonds and refinance all of the non-general obligation bond debt in the same manner as was done in 2015 to enable a substantial net present value savings for our capital budget position and substantially free up funds in the present year budget to enable investments to help boost economic growth and address suffering in the Rhode Island economy. It has several protections built in, including that there be approval of the General Assembly. And I think that that is important to make sure that no bonds will be refinanced that won't be a good deal, including the fact that we are then going to be giving a fuller guarantee. And it also requires that there be an interest rate reduction such that money is saved on a net present value basis. So I think it's a really useful idea to address difficult budget situations, could potentially free up quite a lot of money, and could also improve our long-term capital position by achieving savings in a net present value basis. So with that, I would take any questions. I do apologize for the somewhat technical nature of the idea I presented here.
We appreciate technical, Senator. Are there any questions or comments from members of the committee? Senator Acosta.
I had a quick, thank you, Mr. Chairman. Thank you, Senator Bell, for proposing this. I think this sounds great. From looking at the bill, I wondered if you would entertain the possibility of adding some language that made it so that the treasurer was required to disclose to the public when they did some of this refinancing. So right now, there's a mention of General Assembly approval if the duration of the new refinance payment would be above 50% of the current duration of the loan, or the bond, but that doesn't mean that the treasurer is obligated to disclose to the public that they have undergone this restructuring of a previous bond.
First of all, and this is confusing, before certain reforms and staffing improvements were made to Legislative Council, there were some practices around exactly the descriptions of bills that often had them be somewhat at variance with the text of the bills. And in this case, that has happened. That 50% thing exists in the bill summary, but does not actually exist in the bill text. I do apologize for that being confusing. I did not want to fight with Legislative Council about a bill summary, so I let that slide. But I do apologize that is very confusing. In terms of your original question, I think it's a good idea. In general, I think that the Treasurer's Office, it would be good if we had more disclosure around what happened with bond issuances. Sometimes it can be difficult to access the bond documents, and I wish that they were more freely available online. The Treasurer's Office might have certain comments around some of the details of the process whereby bonds are sold, and there's some disclosure provisions that may be necessary. I'm not an expert in finance. So with the possible caveat that it could introduce some issues possibly that I might not be aware of, I do think it is a very good idea and something that we should introduce, because more transparency around the way our bonds are sold, I think, is very helpful. The current treasurer has an initiative to advertise more bonds and make Rhode Islanders more aware of those bonds and more able to purchase those bonds. I think that's a very good idea. And the more that we publicize that the issuance is coming up, the more that we can drive up demand for those bonds, and the better interest rate and better deal we can achieve for the taxpayers in the long run.
Thank you, Senator Bell and Senator Acosta. Are there other questions or comments from members of the committee? Okay. We do have public testimony on this legislation. Randall Rose is testifying in opposition. Randall, welcome to Senate Finance. Welcome back, I should say.
Yes, of course. Thank you, Chairman Pearson and members of the committee. I do want to speak on this bill, and I am not happy with the bill as it stands. I'm going to suggest an amendment that might make it better. But first, let me raise what my concern is with the bill. The bill specifically refers to moral obligation bonds, which, as many of us know, have had a very troubled history in Rhode Island. Every 10 or 20 years, the state issues a large moral obligation bond, which is not approved by the voters. It doesn't go through the constitutionally required process for state borrowing. It's technically issued by the Rhode Island Commerce Corporation or one of its predecessors, and whenever these moral obligation bonds, these big moral obligation bonds are issued, they tend to be for dubious investments that the voters would not have approved, and they end up going bad, and then the credit rating agencies force the state to pay it back, even though the state isn't technically obligated to do so. So that happened in 1974 with Fairmount Foundry, which ended up being a really bad investment, even though it was claimed to promote economic development. Then in 1993, happened all over again with Alpha Beta on even a larger scale, and Rhode Island ended up paying even nearly $30 million for that. And then much later in 2010 happened on even a larger scale with 38 studios. So there's a cycle where Rhode Island keeps issuing large moral obligation bonds. They keep going bad. It makes moral obligation bonds unpopular for a while, and then there's a return to moral obligation bonds, which end up costing the state even more. Personally, I believe that moral obligation bonds are, there's a good case. They're in violation of the constitutional requirement that voters have to approve state bond borrowing. But I know that's a subject of debate, so I'm not going to rest on that. My concern is that this bill effectively claims that moral obligation bonds are taxpayer supported. It describes them as bonds that the taxpayers are responsible for paying back. And legally, moral obligation bonds do not carry any obligation for the taxpayer because the voters have not approved them. So what this bill would end up doing is it ends up going on record with the state saying we regard moral obligation bonds as taxpayer supported, and then that carries a risk that the next time the state goes into moral obligation bonds, that will become a club to beat Rhode Island with. It will be there's a considerable risk that will be used against us and used to build a case that Rhode Island is responsible for paying back an ill-judged moral obligation investment that the voters never approved. I don't think we should be legitimizing moral obligation bonds like that. Given their terrible record in Rhode Island, I think it would be better to ban moral obligation bonds rather than creating something that legitimizes them. And a further problem with this bill is that it gives future treasurers free rein to convert any moral obligation bond into a general obligation bond. So if there is a bad moral obligation in bond investment in the future, a future treasurer can convert that into a general obligation bond, making it backed by the full faith and credit of the state, even though voters have never approved. And I have serious problems with that, and I think a lot of people would. So basically, what I do understand Senator Bell's argument that moral obligation bonds carry a higher interest rate than general obligation bonds. General obligation bonds carry the lowest interest rate of all borrowing options, lower than revenue or moral obligation bonds, and they carry a low interest rate because the voters have approved them and they're backed by the full faith and credit of the state. That's why general obligation bonds have the lowest interest rate. So I see how refinancing things over as a general obligation bond would save money in the short term. But at the same time, this bill legitimizes moral obligation bonds, and as I read it, it creates an incentive to issue more moral obligation bonds in the future. So I think it's going to encourage more bad investments, which will end up costing the state more, and that may more than cancel out any interest rate savings in refinancing the moral obligation bonds. So what I would propose is I think this the idea of refinancing existing debt is fine, but I think this bill should include a provision to ban moral obligation bonds in future, and with a definition of moral obligation bonds to ban bonds that are issued without voter approval, which the credit rating agencies treat as obligations of the state, even though they are not backed by revenues and by a dedicated stream of revenues, and not backed by the full faith and credit of the state. So if you include something in there that bans moral obligation bonds and gets rid of provides the opportunity to refinance existing revenue and moral obligation bonds in general obligation form, then I think that would be worth backing. But as it is, this bill creates too much moral hazard. It creates too much risk of borrowing moral obligation bonds. And we've had so much experience with Rhode Island that these moral obligation bonds are repeatedly bad investments. I don't think we should be doing anything to legitimize them unless it's clear that no future moral obligation bonds will be issued. So that's the amendment I would suggest.
Thank you, Randall, for your testimony this evening. That does conclude our public testimony on Senate Bill 161. Are there any questions or any additional questions or comments from members of the committee?
Motion to hold, please.
Senator Felag makes a motion to hold, second by Senator Palma. Will the clerk please call the roll?
Senator Acosta.
Yes.
Senator Cano.
Yes.
Senator De Palma.
Yes.
Senator Felag.
Yes.
Senator Murray.
Yes.
Senator Paolino. Senator Paolino.
Yes.
Chairman Pearson.
Yes.
Senator Seveny.
Yes.
Senator Sosnowski.
Yes.
9 in favor, 0 opposed.
Thank you, Mr. Clerk. We will hold that piece of legislation. Next on our agenda this evening is Senate Bill 225 by Senator Bell, an act related to taxation, definition of corporate net income. Senator Bell.
Thank you so much, Mr. Chairman. And if I may very briefly, I am currently working on legislation that's in the Legislative Council process that would amend the Constitution to require voter approval for moral obligation bonds, and I hope that would address Mr. Rose's concerns. This particular legislation here, 225, stems from the Trump tax cuts for the rich. One of the provisions put in the Trump tax cuts for the rich was a provision that created special tax exemption zones where unrealized capital investments that were large enough to be qualified, which means fairly large investments, of unrealized capital gains in certain zones would allow you to write off the capital gains on that investment, essentially. And so the idea is there's a bunch of investments people are sitting on, they have capital gains, and once you sell an investment, it becomes realized, and you have to pay the capital gains tax. But a lot of times people don't sit on various investments because they don't want to pay the capital gains tax. And so the idea is that in the Trump tax cuts, that it would incentivize wealthy people to move investments into certain areas by entirely exempting them from paying capital gains. I thought this was a very problematic idea, and in general, I very much supported the national movement to oppose the Trump tax cuts for the rich. These zones are sometimes referred to by the term opportunity zones. I find that term a little bit offensive because the idea is, in principle, these are supposed to be zones where low-income people live. And I think it conveys this idea that low-income people need additional opportunity. And I think it's a little bit demeaning to low-income communities. So I don't like to use that term, but that term is often applied to these particular zones, just for clarity about what we're talking about here. These zones in Rhode Island have been drawn around all of downtown Providence, partially because some of the people who live in downtown Providence are low-income. There's some low-income housing there. There was a zone drawn to include the Metacomet Golf Course. There was a zone drawn around the CVS headquarters in Woonsocket. And there was a zone drawn in Olneyville and several other zones around the state. So the idea ultimately stems from this idea that high dollar investment in mostly in real estate investment in a low-income neighborhood will trickle down to the people living there. However, in effect, for instance, a luxury hotel development in downtown, I don't think is going to actually meaningfully improve the lives of my constituents living in Cathedral Square apartments 5 blocks away. And I think also that a lot of the high-end development in low-income communities actually winds up gentrifying these neighborhoods and displacing many of the residents who currently live there. So many of the residents actually wind up receiving damages, and it really winds up actually hurting them quite a bit, being displaced as rents rise. So one of the more concerning things that we did in the 2019 budget, and one of the reasons I voted against it, was that we inserted language into the budget to create a mirror provision in our state tax code, to create a mirror exemption for unrealized capital gains investments in these zones. But in our case, we actually made it even more aggressive than the Trump tax cuts for the rich. We made it so you only had to hold the investment for 7 years, whereas in the federal Trump tax cuts for the rich, it's 10 years. So we actually went a little bit further than the Trump tax cuts for the rich. And I found that very concerning. This provision of the Trump tax cuts for the rich has come under a lot of additional national scrutiny. There have been a lot of scandals around the country related to it. And I think that we really should move away from this provision. I really do think it tends to benefit a lot of wealthier investors who really don't need assistance from the state of Rhode Island, especially not when we have so many other pressing needs facing our state. And I really think it is always better that we invest in people who are struggling rather than invest our limited state money in tax breaks for wealthy developers. And with that, I'd be happy to take any questions.
Thank you, Senator Bell. Are there any questions or comments from members of the committee?
Mr. Chairman?
Senator DePalma.
Great, Chairman. Senator Bell, I remember when we did hear this legislation, I don't know how many years, sorry, I don't know how many years ago now, and there was I don't want to say vigorous debate, but there was some debate with regards to, as you brought up, the 10 years and the 7 years. And for those who don't remember, some who remember who were there, the reason the 7 was put in place, set aside it's the right policy or not, put that aside for a second from the Trump perspective, Trump administrative perspective. The reason the 7 was put in place was if you're going to create these opportunities, I know you don't like the word, but that's the commonly used word with a lowercase or uppercase of opportunity zones or opportunity areas across the country. If Rhode Island was 7 years as opposed to 10 years, you would potentially, going back to your bill previously, and one bill ago or 2 bills ago, I forgot which one it was now, with regards to trying to create something for an interstate compact, so to speak. If we had 7, Connecticut had 10, and Massachusetts had 10, and somebody wanted to stay in New England, well, let's go to Rhode Island because of the 7 vice the 10. That was the rationale for doing it. Like I said, I'm not espousing the Trump tax policy or incentives back then, but that was the reason 7 was put in place. Thank you, Chairman.
Thank you.
And thank you, Senator DePalma, for that comment. I think that, as you put it, that is the rationale. And I think also, as you said, it's not necessarily clear that we should espouse the underlying policy agenda here. And to that lens, I actually think that most of these investments do wind up being problematic investments. High-end real estate development in low-income communities is often very detrimental to those communities. And so I think actually, in some ways, is an additional reason why the 7 years is problematic, because it can accelerate some of these investments, many of which are, I believe, damaging to the communities in which they land in, and actually not beneficial.
Thank you, Senator Bell and Senator Palma. Are there other questions or comments from members of the committee? Hearing none, we did have one witness signed up but is not going to testify in support, James P. Cunningham, Jr.
Motion to hold.
Senator Palma makes a motion to hold, second by Senator Felag. Would the clerk please call the roll?
Senator Acosta.
Yes.
Senator Cano.
Yes.
Senator DePalma.
Yes.
Senator Felag. Senator Felag, yes. Senator Murray.
Yes.
Senator Paolino.
Yes.
Chairman Pearson.
Yes.
Senator Seveny. Senator Seveny, yes. Senator Sosnowski.
Yes.
9 in favor, 0 opposed.
Thank you, Mr. Clerk. We will hold that legislation. Next piece of legislation on our agenda this evening is Senate Bill 361 by Senator Bell, an act relating to capital development programs, statewide referendum, provides for $1 billion in bonds to improve local roadways, pedestrian spaces, bikeway paths, and municipal parks. I'll note for the committee that that is a typo in the bill description. That it is not 1 million, it is 1 billion. I can't help the Austin Powers reference, but Senator Bell.
Yeah, thank you so much, Chairman Pearson. You are correct. It is $1 billion. The idea behind this legislation is that we have really serious problems with the quality of our local municipal infrastructure. Our roads are falling apart, particularly in low-income communities. Our parks are in need of substantial improvement, particularly in terms of trash removal and rehabilitation to many of their public spaces and public structures. There's so many investments that are needed. Our bikeways, municipal local bike paths need substantial investments, as well as our public pedestrian spaces. So the idea essentially is to leverage the same tool that are used in our neighboring states. In Connecticut, there's a program called Town Aid Road that provides state funding for local roads. In Massachusetts, there's a program called Chapter 90 that provides state bond money for local roads. And so the vision here is to take these successful programs in our neighboring states. And I think often, if you'll notice, if you go to a low-income community in Connecticut or Massachusetts, the quality of the roads there might not be quite as high as in some of the wealthier communities, but it is in general a higher quality roads, and you can really often notice this quite clearly than the roads in some of the lowest income communities here in Rhode Island. And I really believe you can see in practice the effect that these successful policies have in Massachusetts and Connecticut. We also have a long-term crisis in terms of municipal financing. Even many of our wealthier communities face serious financial headwinds in terms of their pension funds, in terms of their long-term capital budget picture. We had recently, even in East Greenwich, one of the wealthiest communities in the state, there were some recent issues with some financial difficulties. These are obviously even worse in many of the more low-income communities. So the vision here would be to relieve some of this pressure by making some investments in this fundamental, crucial local infrastructure that our municipalities so desperately need. And the scale is large, the amount of money is large, but also the scale of the problem is very large. And anyone who doesn't believe me, I encourage you to go drive through some of the neighborhoods in Providence on some of the Providence roads. It is, I think, a very clear picture, and you can see some of the same things in Pawtucket, Central Falls, Woonsocket, West Warwick, many communities across our state. So I'd also add that Massachusetts has a practice of taking out very large bonds for transportation infrastructure. Recently took out a bond that, if you filtered it down to the size of Rhode Island, would be more than $2 billion. So it can be done. We have not typically done it here in Rhode Island, but I do believe a bond of this scale is feasible, could be afforded within the state's long-term budget picture. And I think it's a necessary investment. And if we do it at the state level, it will be cheaper than doing it at the local level. So I think if we were to do this, we would actually solve a lot of the long-term problems that many of our municipalities face, and it would be the most affordable way for us to do this. So with that, I'd be happy to take any questions.
Thank you, Senator Bell. Senator Acosta.
Thank you, Chairman. And thank you, Senator Bell, for putting this up. I've often remarked that I hate Robert Moses, but I admire the vision that he was able to implement, right? And one of the frustrations I have is we have no good guy or gal version of Robert Moses, this type of long-term planning for what the world could be like. I think part of that is because of political pressure and the turnover in election cycles. But I simply want to ask you, do you envision this as a 20-year plan in public infrastructure? Because the bill itself, or the bond referendum would go for 20 years max for how long you could pay this. So would this be a 20-year plan for infrastructure development, or do you see this as somewhat less ambitious than 20 years, maybe 10 years? How do you envision the carrying out of this?
Good question. So the 20 years comes from the standard practice in Rhode Island's general obligation bonding, which is that we typically do a 20-year Series A tax-exempt bond. And there's several reasons for that that have to do with the technical details about what we can get the best deal for. But in general, I think there's a reason why general treasurers have repeatedly chosen this term, and I think it is a good choice given the realities of the financial system. So it really has to do with some of the details around what the level at which we can both maximize the return for the taxpayer, leverage short-term low interest rates, and leverage federal tax exemptions. So that's where the 20-year comes from. It's really the bond term. I actually envision it as being more of a short-term program. We face a lot of really immediate needs here in Rhode Island. The condition and the backlog of infrastructure in our local municipalities is very severe. Particularly if you look at our parks. Our parks often have a huge amount of accumulated trash. Our parks are often heavily overgrown. Our parks need substantial upfront investments. I think the same thing is true of our roads. And in fact, if you make many of the investments early on, you can wind up saving more because many of these investments provide substantial savings in the long run. If you go and you repair cracks in roads, you don't have water seeping in, freezing, ripping them up, and creating as many potholes. Many communities, such as Providence, and I assume it's similar in many other states, but I'll comment on Providence because that's where I represent, have a problem of not being able to afford in the short term the repairs that are needed to keep the repair costs down in the long term. And by making these investments now, we can really help tackle that problem. The scale is really large, and I do believe, even though $1 billion is a large number, there is more than $1 billion of need out there right now.
Thank you, Senator Bell and Senator Acosta. Senator DePalma.
Thank you, Mr. Chairman. Senator Bell, glad you brought the topic up. So just want to make a few comments. There's you'd be interested in seeing Senate Bill 29. When you get a chance, I encourage you to look at Senate Bill 29. You don't have to do that now. It's an exciting bill. It's a resolution, but it's clearly an issue at the national level. And I think we heard President Biden speak what we're going to do next, whether it's voting, whether it's immigration. I think we're going to see infrastructure coming post-haste. And everybody benefits from it, whether you're a blue state, red state, purple state, all states benefit from it. So, but I encourage you to look at Senate Bill 29. The second piece, with regards to the dollar amounts in here, if you really want to take a look at the biggest piece, obviously, is I think you have $500 million for roads, et cetera, roads and bridges or whatever. Roadworks program that was put in place back, I think we're year 5 into it, I think. I do still have the original plan. It's in the back of my car. It's in the binder, the 10-year plan. And I think it's a phenomenal plan that Director Alvidi put in place with regards to, it gets updated every year. Prior to that, we would have a 4-year plan that got updated every 4 years. There may have been some nuances that modified it slightly, but it was a 4-year plan. And if you want to get something into that, you had to find a way to sledgehammer to crack it open somehow and put something in. But we now have a 10-year plan that's funded by pay-go for the most part. Someone said, well, why did we just go off the bond the other day for $70-something million? Well, we did that because of the challenges we've had with the pandemic. But from a pay-go perspective, including the 4-letter word that I'm not going to say that begins with a T and ends with an L, Senator Pearson knows what that is, while it's not achieving the total dollar amount, if you look at all the various installations of the TO word, they're in fact exceeding their dollars by about 2%. I try and check on it every couple weeks, every month or so, and there's 2 more coming online. So I think we have an approach on the roadway side of things, but clearly in some other areas, when we go out to bond for greenway and other kinds of things, parks and recs, we spread the peanut butter way too thin, categorically way too thin, and try and do too many things with so little that we make a dent on some things, but not enough. The only other point I wanted to make on the comparison, so I'm not certain I would make the comparison you made without having the facts and data with comparing it to other states. So folks know I'm originally from Bridgeport, Connecticut. Been here though for 38 years, and this is where we will live forever. Haven't gone down since the pandemic. started, still have family down there. I would venture to guess, and it's similar to, it's not the capital city in the state of Connecticut like Providence is, but it is the largest city in the state. I venture to guess there's probably numerous roads that would rally, not that we want to be race to the bottom, but that would rally some of the desperately needed repaired roads in Providence. But before we use the 4-inch paintbrush, take a drive down there, 2 hours and 15 minutes to get there. You can enjoy some time and drive back, but you can drive through some of those roads and see what it's like. But thank you for bringing it forward. Thank you, Chairman.
Thank you, Senator Palma. Any other questions or comments? Senator Seveny.
I've just got one. Yeah. Senator Bell, have you reached out to the General Treasurer? I mean, has he weighed in on any of this, on how this fits, over the long run budgetarily, all this debt service that would come up?
So I haven't reached out to him specifically. The Public Finance Management Board, which he oversees, has foreseen our long-term ability to add larger amounts of debt. I think if you look at many of our fiscal reports, you can see that the capacity is there to substantially expand our general obligation bond capacity to the level that would be envisioned here. So although I have not reached out to him specifically, I do think that much of the work that the Public Finance Management Board has done shows and demonstrates that, particularly given our low interest rate picture, we do have the capacity and the bond capacity to move forwards with this.
Chairman, we should be seeing a fiscal note on this, right?
We will. They will come likely next week.
Whenever.
Yeah, likely next week.
All right, thanks.
Any other questions or comments from members of the committee? Okay. Senator DePalma.
Motion to hold.
Senator Palma makes a motion to hold, second by Senator Seveny. Will the clerk please call the roll?
Senator Acosta. Senator Cano.
Yes.
Senator DePalma.
Yes.
Senator Felag.
Yes.
Senator Murray. Senator Paolino.
Yes.
Chairman Pearson.
Yes.
Senator Seveny. Senator Seveny, yes. Senator Sosnowski.
Yes.
8 in favor, 0 opposed.
Thank you, Mr. Clerk. We will hold that legislation. Next on our agenda this evening is Senate Bill 376 by Senator Bell, enacting towns and cities' general powers. It authorizes municipalities to tax school tuition and school meals and contains certain exemptions from taxation. Senator Bell.
Thank you so much, Mr. Chairman. So this legislation addresses a number of problems that we've had with how we handle the taxation of private schools in municipalities. The first problem it addresses is that the current law taxes private schools based off the amount of excess land they have. But it's a fairly one-size-fits-all formula, and it's not well adjusted for the amount of wealth that a particular private school might have. There's some private schools in denser areas that don't have as much land, that have very high tuition, earn a lot of revenue, can afford some taxation and function with a large amount of money. But then there are some that have more land and might not have the same level of revenue. So what this does is this shifts the taxation to the amount of revenue. And it really focuses on the amount of high dollar tuition. So it's only tuition in excess of $25,000 for private colleges and $13,000 per year for private high schools. It's also tuition net of financial aid in order to encourage these institutions to give larger amounts of financial aid. The other problem that this addresses is there's a particular large and wealthy institution, Brown University, where, full disclosure, I received my PhD, and that particular institution has a large amount of money compared to the other private institutions within particularly the city of Providence, and I would say the state as a whole. And this particular institution has a charter exemption. In its original charter, which was signed by King George on behalf of the colony of Rhode Island. And pursuant to the United States Supreme Court decision in Dartmouth v. New Hampshire, this colonial charter is in fact binding on the subsequent state of Rhode Island. So it is a binding contract that can never be broken. Even though it was signed by the colony of Rhode Island, we have inherited it and will, in perpetuity, hold to this contract, and it cannot be broken. And so previous bills to tax wealthy colleges and universities have run into a problem that this particular institution would be excluded because of its tax exemption. However, we did a legal analysis with the assistance of legislative counsel and discovered that the terms of that exemption were fairly narrowly worded to what will be meant by the legal definition of, quote, estate within the 18th century. And that really is limited to assets, not income. So there are certain other cases that have been held where these exempt institutions actually do receive taxation on some of their income. So the idea is to shift it to taxation of income, of high dollar tuition income from large, high expensive tuition bills. And by doing that, it will address the problem where this one particular institution has always been exempt because of this ancient charter. And for a long time, people have been looking for a solution to this problem and a fair way to do this that doesn't unfairly exempt one particular institution. And I believe that this solution will work well and get around this problematic legal issue. It also addresses a couple of other issues. It allows a lot more municipal discretion for the crafting of good programs. Part of the vision here might be that this might not actually be implemented, but it might be utilized as negotiating leverage, as happened with Senator Archambault's legislation in Smithfield around Bryant College, or Bryant University. And then it would also fix an issue, a technical issue about the 4% cap, so that this revenue would not then create a drag on the budget of Providence, like the governor's previous initiatives around this did, which is why Providence wound up proposing those initiatives. So it fixes that problem by deducting revenue from the 4% cap. So with that, I'd be happy to take any questions about this legislation.
Thank you, Senator Bell. Are there any questions or comments from members of the committee?
Mr.
Well,
Chairman?
Brown University could have been in Warren, Rhode Island. It was originally there before it moved to Providence. A little history.
Brown University, I believe, does own land all across the state of Rhode Island. So for all we know, Brown University does own some land in Warren. It wouldn't surprise me.
Well, they started off in Warren, Rhode Island, and became Rhode Island College, and then when it moved to Providence, it became Brown University.
Good history.
Mr. Chairman?
Senator
I think you should lock up your diploma before Brown revokes it.
Senator DePalma.
Thank you, Chairman. Senator, I got a couple of questions and a couple of comments. How did you choose 25,000 for higher ed?
So that's a reasonable question.
It's a great question.
It's a good question, and I would be willing, I think, to adjust that number higher. The idea is partially because it's a round number, and partially also to exclude the idea of when you have someone who receives a substantial amount of financial aid and is not essentially paying a very large dollar bill, and you're really not talking about accessing a wealthier institution. The goal of doing this is to make institutions that have smaller tuition bills exempt from it, because the goal is really to target it towards the wealthier institutions. And
How did you choose 13,000 for K-12?
So 13,000 was chosen because it is 25 divided by 2 rounded up. I would be willing, again, to adjust that number based off a market analysis. But I would note that municipalities are given discretion to set a rate and bracket structure above this. This is just a limit that is applied. So a municipality could set a higher exclusion, could set a progressive rate structure such that the marginal tuition income, net tuition income above 25 or 13,000 would be taxed at a much lower rate. So that discretion is definitely given to the municipalities, and it's envisioned that they would set up a progressive bracket structure on top of that. But this is just a hard exclusion to make sure they aren't going after institutions that really are struggling financially.
So as a member of representing the Rhode Island Senate, along with a couple others, Senator Gallo and others, I'm a member of the New England Board of Higher Ed. And, I'm not certain there's any private institution has any tuition even close to that. So let's put that aside for a second and where things are going and whether the tuition should even be what they are. Put that aside for a second. I guess the other question becomes, many private institutions have set up agreements, multi-year agreements. One of the institutions you mentioned before, in fact, set that up with the leadership of the city of Providence many times. So that would be null and void? That would go away?
No, very good question. So one of the things one of the ideas, as I mentioned behind this, is that municipalities, this is just authorizing legislation pursuant to, I think, Article 13, Section 5.
I understand the enabling side of things, but there are cities and towns, maybe some towns, I guess, that have agreements already in place.
Right. So actually, the idea is to be consistent with that. Municipalities would not have to implement such a tax. And part of the vision might be actually that by having this authority on the books, it would increase the leverage. And this is something we've seen in practice with Senator Archambault's legislation in Smithfield, which was used by the town of Smithfield to strike a much better deal with Bryant University. So they never wound up actually going after taxing fire services and charging Bryant for fire services. And so the idea is that it could be used the same way as Senator Archambault's legislation for Smithfield was used for the town of Smithfield to negotiate a better deal with Bryant University. It could be used by municipalities all around the state in the same way. It would not have to be explicitly applied. And in fact, I envision that it may well be used that way.
So the other, I guess, comment or question is, with regards to, I'm not certain there's a private institution that exists, K-12, secondary, higher ed, for which tuition pays the cost of expenses for instruction. I'm not aware of any. There might be some out there. I'd like to see those from my involvement with the Board of Higher Ed, involvement with schools in Rhode Island or Connecticut, where I was there. Typically, there's resources and fundraising to great degrees that offset the cost of tuition. So tuition pays, I don't know, 85% maybe, 80% maybe more, higher somewhere else, but nowhere near 100%. So one thing you're looking at here is potentially leveraging a tax on something that doesn't even cover the cost of the instruction that's being provided. So that's part of the challenge with regards to we're now taxing a service on a nonprofit. That's technically that's what this seeks to do, because the cost of tuition pays for instruction. So that's a service that's being provided by the leaders of the workers, educators, whether it's higher ed professors, K-12 educators.
I think you raise a very valid point, Senator DePalma. Yes, I mean, removing this revenue from these institutions would absolutely have a detrimental impact on these institutions. But I think that there are 2 points I'd put in response to that. One, it is redistribution. We currently have severe challenges with the public schools around the state of Rhode Island. Many of them are driven by funding. In fact, City of Providence, the takeover, is requesting an additional, I believe, $5 million to fund the Providence schools. So we do, in fact, have a huge need. And by freeing up this funding for municipal investments, which are, of course, heavily invested in our schools, in some ways what we're doing is we're redistributing funds from very well-funded private education towards public schools, where the quality of education is very, very much lacking, and we need, I think, increased investment. The other thing I'd say is that having experienced the education that you get from these very wealthy institutions, I am somewhat skeptical that the amount of money that is there is extraordinarily well spent, and in some cases, I don't think is necessarily the best, spent at the best value for money. In some cases, some of the investments in buildings are a little bit unnecessarily high-end. And in fact, I think Brown University is a good example of this. Brown University is substantially poorer than universities with similar amounts of prestige, and I think, in fact, delivers more or less equivalent quality of education to, or in some cases, a better quality of education to other Ivy League universities who have an endowment for a student 5, 6, 7, 8, 9, 10 times that of Brown University. So I don't think actually it's the best marginal use of money.
Mr. Chairman, if I may, so Senator Bell, I think I'll keep my master's degree diploma from Brown. You may have to rescind yours. Thank you, Chairman.
Thank you, Senator Palma and Senator Bell. We do have a couple pieces of testimony submitted. Anthony DeSisto in opposition and Mark DeSisto in opposition. And we also do have testifying this evening, Dan Egan with the Association of Independent Colleges and Universities of Rhode Island in opposition to the bill. Dan, welcome to Senate Finance.
Thank you, Chairman. Thank you, members of the committee. I appreciate the opportunity. I unfortunately did get the last 30 seconds or so of Senator Palmer's insight, so I'll fly a little blind on that, but I will just take our position on behalf of the Independent College and University of Rhode Island in opposition to Senate Bill 376. Obviously, the authorization of cities and towns to tax net tuition on private institution higher education for our membership is troublesome. Any tax on education is problematic. I will start just simply to step back a little bit and make sure, I know the committee chair knows this in terms of conversations of the budget, but I think it's important for the committee to be aware of what COVID-19 has meant to the institutions, what it has meant to our state. Obviously, there's many sectors of our economy that have been harmed greatly by the COVID impact, but I would argue that no sector but our sector has been harmed as fiscally and as greatly as the higher ed sector, with about a $250 million loss to our operating budgets across $2.7 billion in operating budgets. About 10%. What the state faced at the beginning of this, we are facing as a sector, 10% shortfall. So I would just want to paint that $75 million in funds and lost revenue for spring and summer semester, more than $100 million in testing. At one point in the fall semester, 1 out of 2 tests in the state of Rhode Island will be performed by our institutions, and that was testing Rhode Island faculty and staff, obviously testing Rhode Island students and students attending our institution. And that partnership was important to keep the economy running, keep our institutions up and running, keep our faculty and our students and our community safe. And we did that at a great expense, but I think the state and our institutions benefited by that yeoman's-like effort to get that through and get that to the end. Expected lost revenue could top $100 million this semester. So I just want to paint that picture for the sector as you think about a pretty aggressive, and I understand it sounds like from the sponsor's position, it's about entering into a conversation. We stand ready to have that conversation in terms of what our institutions do collectively for their host communities. To Senator DePalma's point, there is not an institution in the country that generates enough revenue to cover the cost of attendance. There may be 1 or 2 that I'm unaware of, but I think Senator Palmer, having served with him on the New England Board of Higher Ed, nailed that point for me, so I didn't have to, but I did want to reinforce it. Obviously, one other issue that faces us is, we're a sector that's demographically challenged. We're going to have 20,000 less students from the so-called demographic cliff in 2030. 20 institutions in New England have closed or shuttered their doors since 2005. We anticipate that could happen to more post-COVID. The next semester will be really, really telling for many institutions. Fortunately, at this point, our institutions have survived it. We are on the other side. We've maintained our employment levels. We're happy about that. But any tax would put our institutions at a severe disadvantage to our neighboring states and competition. And finally, I think the most important concern is the authority for municipal taxation on revenue for any sector. That's a significant change to Rhode Island policy. And as I had said earlier, we'd be more than happy to have a conversation about tax policy that's equitable, treats all sectors equally, and doesn't go after one sector of the nonprofits or one sector of the for-profit, but we'd sit and be ready to be at that table. And finally, the expansion targeting only one sector, and at this point, one institution, it appears from the sponsor's words, really raises serious equal protection concerns. And I think that would be something that the committee should take into account. I'll just close by saying those are our top-level concerns, and we respectfully oppose the legislation, and I'll take any questions you may have.
Thank you so much, Dan. Are there any questions or comments for Dan from the committee? Hearing none, that does conclude our public testimony. Thank you, Dan.
Motion to hold, please.
Thank you,
Second.
Dan. Thank you, Dan, for testifying this evening. There is a
Thank you,
motion.
Tom.
There's a motion by Senator Felag and a second by Senator Palmer to hold Senate Bill 376. Will the clerk please call the roll?
Senator Acosta.
Recuse myself?
Senator Cano.
Yes.
Senator De Palma.
Yes.
Senator Felag.
Yes.
Senator Paolino.
Yes.
Chairman Pearson.
Yes.
Senator Seveny. Senator Seveny, yes. Senator Sosnowski.
Yes.
7 in the affirmative.
7 in favor and 0 against. We will hold that legislation. That does conclude our hearing today.
Motion to adjourn.
It does conclude Senator Bell Day here in Senate Finance. Senator, thank you for joining us this evening. Senator Felag makes a motion to adjourn, seconded by Senator Acosta. All those in favor?
Aye.
Aye.
Thank you so much, everyone. We are adjourned. Have a great night.